Hello friends, my name is Kamal. Welcome back to my channel. And today I'm going to be discussing a very important and very easy strategy which can easily earn you 10,000 rupees a day. And this is the minimum amount that I'm talking about. And I'm going to explain it in detail with examples and a chart and also explain the entire concept. So please watch the video till the end to take a maximum benefit from this technique. And I'm extremely happy to inform you that I have finally started the Telegram channel, which so many people were requesting me to start. And once you become a member of this channel, I will keep giving important information, important news items related to stocks so that you can gain maximum benefit out of it. And also, I will be giving my views on the stocks that I feel should be bought or sold, and you can do your own research and benefit from them as well. And it's a totally free channel, so you can find the link of the channel in the description. So let's start this video. So importantly, first I need to explain before I start with the chart and explaining how you can earn this amount is to understand candles, shadows and volumes. So candles are of various shapes and candlestick patterns are the basis for technical analysis. And I've made a very detailed video on candlestick analysis, and you can watch that video. I will give the link in the description and you will understand how each candle looks like and what is the significance, because each shape has a different significance. So you cannot treat all candles in the same way because each candle has a different meaning. It has a different psychology of the buyers and sellers at that particular time frame. Second point is shadows. Shadows of a candle are very important, and shadows signify whether there is any movement in the opposite direction. So for example, an upper shadow in case of a green candle, which means a bullish candle, means selling at the high point. So when a stock reaches a high point and selling comes in, then it will form a upper shadow. Similarly, if there is a red candle and there is a lower shadow, that means at the low point of that particular time frame, there were buyers who came in and pushed the price up. Therefore, it made a lower shadow. And secondly, not only that, it's very important to see the follow through of that buying or selling caused by the shadow. It may be an upper shadow, it may be a lower shadow, but after the shadow is formed, the next candle should also see a follow through. And when I show you the example, you will know exactly what I mean. The third extremely important factor is volumes in that particular time frame. So if the volumes are weak, then it's likely that the trend may reverse. If the volumes are strong, it may signify that the trend may continue. But if the volumes are too high, that means there was a lot of selling pressure also, because sellers also came in and tried to keep the price down. And a lot of times the price also reverses if the volumes were extremely high. So let's see how this all adds up when I show you the example. So the parts of a candle basically are, the first is the body. So it shows the opening and closing for that particular time frame. And second are the shadows, upper and lower. Shadows are the lines above and below the body of the candle, which depict the highs and lows for that particular time frame. The top of the upper shadow is the high and the bottom of the lower shadow is the low. So basically this is the body in the green and the red. The green candle is a bullish candle, which is why the arrow is pointing up, and the red candle is a bearish candle, which is why the arrow is pointing down. This is the opening price. In case of a green candle, the opening price is always lower. This is the lower shadow and this is the low in that particular time frame which the stock price formed. From here to here there were sellers, then the buyers came in and started pushing the price up, and once it crossed the opening price, it kept on going up till this point. This is where the buyers were very strong. After that the sellers came in and started pushing the price down, and this was the closing price. Now let's see what happened in case of a bearish candle. So this is the opening price. In case of a bearish candle, the opening price will be higher and the closing will be lower. So it opened here and the buyers tried to take it up, and they formed this high. Now this is the point where sellers came and they started pushing the price down, and after it went below the opening price, it kept on moving down till this point. Now this is the point which was the low of this particular time frame, and over here also the buyers came in and started pushing the price up, and they were finally able to push it till this point where this candle ended. because the time frame was over. So this is the upper shadow, this is the lower shadow, and this is the body for both these candles. Now let's come to the stock. Now I have chosen a stock of Bata, and I've shown 3 days. Now all you need is to map on your chart is the Vwap, which is shown here in red. The red line depicts the Vwap. And second, you need to plot the 20-day EMA. It's not a simple moving average, it is the exponential moving average, and this is depicted by the blue line. So this blue line is a 20-day EMA, and this red line, which is going here from here till here, is the VWAP. Now, just to show you an example, the closing price on 3rd September, which is this price, was 1373. The next day, it opened lower, so it opened at 1343, and it went down a bit. It formed a lower shadow and then started moving up. The high was 1391, which is depicted by this point here, and thereafter it started moving down, and finally the stock closed at 1349.35. Now I will show you with this example on 4th, because it is the latest, so I've chosen the latest so that I can show you exactly what happened. And the best point about this particular example is because it gives movement both ways for the same stock on a single day. So first it went up, then it started moving down. So this is a perfect example to show you how a stock can be so volatile. On a single day, it can go both ways, first up, second, and next it can go down also. And you can see here, it has ended almost 2% down, about 25 rupees below the closing price of the previous day. Now, what you need to do is, first you have to look out for a shadow. So basically, a green candle will most probably, unless it's a Marubozu candle, it will have a lower shadow. So this is where the lower shadow formed. After this, it started moving up. At the moment you find a lower shadow and then you find a green candle, you can immediately enter. But if you want to be extremely safe and you don't want to have a loss in your trade, you can wait for the first 15 minutes. This is a 15-minute chart. Okay, so each candle depicts a time frame of 15 minutes. So what you need to do is you need to wait, and over here you need to enter when the price closes above both of these or below both of these. So in this case, since the stock first went up, you need to buy out at this point, because over here this candle has closed above the VWAP as well as above the 20-day moving average. So even if you bought here, the price was roughly about 1367 or so, 1370, and from here it went up to 1391, right? Now over here, if you see, like I said, the second most important thing after shadows and candles is the volume. So you can see the volume is much higher than the average volumes of the other candles. There are very few cases where the volumes were very larger than this volume, which is over here, over here, over here, and over here. So the moment you see very high volumes, you have to be very careful, because as you can see in this case, it went up a bit more, but the eventual ending was in red. So over here it has ended with very strong volumes. Now what happens is, if it makes a very small body with very high volumes, a lot of times the upward trend will continue. But in this case, what has happened is it just started moving down. So the moment you see, and this, what I also said was that once you see shadows, you also need to see follow through. So in this case, what happened is that after it made this candle, it made an upper shadow and it ended again in the red. So the moment the next candle you see red, you can start to sell. So if you would have sold even at this point of time, it would have made excellent gains, because if you see, it has come down over here and it has ended below these two candles. So even if anybody wants to be very, very sure, a good trader will short over here only, because he sees a follow through after this candle. He sees a follow through, so he will short here. But if you want to be extremely careful, even if you short after you see the closing below the EMA and the VWAP, you can immediately short. So even if somebody shorted here, you can see it went up slightly. So in this case, if you short here, you can keep a stop loss of the high. So basically 1391 will be your stop loss. And if you short here, it went up, but obviously your stop loss would not have been hit because the price did not reach this point again, and then it started moving down again. So even if somebody shorted here, he would have made very handsome gains over here also. So when I say earning 10,000, that was the minimum amount. If you follow this technique, you can earn much more than 10,000, because if you see from here also to here, your 10,000 would have been complete. Now again, if you took the trade from here to here, or even from this price to this price, you would have made at least another 2%, so it would have been 4%. So your day's gain would have been 20,000 instead of 10,000. So this is an extremely effective and extremely safe method to take your trades, to buy or to sell, whichever the case may be. And as you know, even a 1% movement would mean a profit of 5,000. So 2% movement will mean 10,000, and a 4% movement will mean 20,000. So you can make a lot of money if the stock moves 10% in a day. That means 50,000 rupees. If the stock moves 20% in a day, it means 1 lakh rupees. So 10,000 is the minimum amount that I've said that you can easily earn in a day if you take these very simple steps and incorporate them in your trading. And if you want to be extremely careful, you can plot these two indicators on your chart. Thanks for watching this video, and if you liked it, please give it a big thumbs up, because it gives me motivation to make good videos for you. And if you have any suggestions or comments, you can write to me on my email investwise0070@gmail.com. And if you haven't subscribed to my channel, subscribe so that you can be notified of future videos. And while subscribing, please also don't forget to press the bell notification, and also select the all option when you press the bell notification, so that you get notifications for all my videos. And also subscribe to the Telegram channel so that you can keep getting ideas for profits in terms of stocks, whether for intraday or for investing. And thank you so much once again, and God bless.